Hello, in this video, we're going to analyze the key trends in the greater Sacramento Fourplex market. This will help us to predict the likely direction of the market over the next 60 days. This is for the time period ending at the end of February 2024. By understanding these key trends, you'll have a big advantage over buyers and sellers who are not studying these developing trends. Let's get started by looking at the local inventory trends. And then we'll take a look at some of the economic trends like interest rates and inflation and get an idea of how that's impacting the current market for fourplexes. While no one knows exactly what will happen over the next few months, after many years of doing this type of statistical trend analysis monthly, I have found that market changes leave evidence and patterns start to develop. For those of you that don't already know me, my name's Ron Benning. I've been a real estate agent since 1989 and a broker since 1992 in California. I specialize in 1 to 20 unit properties. In the past decade, I've sold just over 200 of these properties, so I'd like to believe that my experience will help you gain insight into the local market for these small investment properties. For the month ending February 2024, we are in a neutral market for fourplexers. We currently have a 4.5 month supply of fourplexes as of the last day of February. The previous month, we were in a buyer's market. But because the amount of sales doubled from 2 to 4, this moved us back into a neutral market. On a note of caution, it should be noted that the inventory level continued to grow despite the increase in sales in February. With only 4 sales, we are still in a near historically low level of sales. At the current rate, that would only be 24 sales for the whole year. It should also be noted that the inventory is up by 260% compared to last year at this time. We will need to carefully watch the inventory over the next 30 to 60 days to see if it continues to grow, because the fourplex market is near the tipping point between a neutral market, a buyer's market, or a seller's market. It could go any direction, really. So as we look at the relationship between the active inventory, the pending sales, and the closed sales, we can see that the amount of closed sales has been fairly static over the past 6 months, or even trending down slightly for most of the past 6 months, while the long-term inventory trend has been growing over the past 6 months. For clarification purposes, when I talk about interest rate trends, I will be talking about the underlying base rate for comparison purposes only. I'm not offering financing. The rate for small multifamily loans will always be about 0.5% above the base rate. There is no doubt in my mind that much of the growth in inventory is a direct result of how high interest rates have been over the last 6 months. There's not likely to be a single fourplex in Sacramento that will break even with 25% down right now. So what happens with rates over the next few months will likely be the key driver of whether or not we see a buyer's market or a seller's market. If we look at rates over the past 6 months or so, we will see that the base rate peaked in October of 2023. Now, if you look at the pending sales from October through December, over those few months following that peak in the interest rates, we see that the amount of pending sales started to fall off quickly. The key takeaway is that the effect of any significant changes in interest rates will be seen in the pending sales about 30 to 45 days down the line, and in the closed sales between 2 and 4 months down the line after those changes in the rates happen. This last point can be seen in last month's data because despite rates trending up for most of February, the number of sales and pending sales in February were up, in part due to this lag effect because in the month before, rates were trending down. Also, we will sometimes see a short-term pending sales increase when rates trend up, as fence sitters that are worried about missing the boat jump into the market because they're afraid they're going to miss the current rates. At the time I'm filming this video, currently the inflation has been hovering around 3%. That is the key driver of interest rates. So we should be watching the inflation numbers closely to get a better understanding of whether we can expect rates to go up or down in the coming months. If the inflation rate goes over 3%, I would expect to start seeing rates trend up again. Remember, the Federal Reserve's stated goal is to get inflation back to 2%. Now, there are other economic indicators that drive the rate over time. But as I said, right now, inflation, in my opinion, is the key driver of rates. The average days on the market this month is not significantly meaningful due to the small sample size. Over time, if inventory levels are trending up, you would expect to see the average days on the market going up. As inventory numbers trend down, you would expect to see the average days on the market trending downward. However, the average sale price as a percentage of list price is a good indicator of whether buyers and sellers' expectations are matching up. The average sales price as a percentage of original price was 91% in February, which was down 5.2% compared to the previous months. This means prices are soft right now for most fourplexes, whether sellers know this or not. This chart shows the average list price compared to the average sale price. We can clearly see that both buyers and sellers believe the prices are going down in the short run. Sellers have been lowering their asking prices to lure the few buyers who are actively looking. For sellers, now is not the time to be pricing above recent sales. Sellers should also be very careful to make sure their cash flow will justify their list price through capitalizing their rents. I cover that topic in more detail in my video, Investor Sellers, Avoiding the 9 Critical Mistakes. Pricing based on comps alone will not work if your rents are below market. Buyers, let's run those numbers and offer accordingly. Since February 29th, we've seen a slight dip in the interest rates, and the active inventory has actually fallen to 14, and the pending sales have risen to 8. Does this mean that the market is swinging back towards a seller's market? Or is this just a sign that many sellers who have been on the market a long time finally adjusted their price and those properties went pending? It's hard to know. New inventory levels and what happens with interest rates in the next few months will help determine which way this teeter-totter fourplex market is going to go. As you can see, many factors can affect the local market for fourplexes. But by keeping up on these developing trends, you can make more informed decisions about buying and selling. If this is your first time to the channel and you want to know everything about selling and buying investment properties in Sacramento, please subscribe to the channel. Whether you're planning on selling in the next 7 days or 7 months, give me a call, text, email, or schedule a Zoom meeting. I'm happy to go over all of this in much more detail and answer all of your questions. And my goal, as always, is to help you to make a smooth investment purchase or sale.